Hi, this is Brent with ExactTrades.com. This is one of a series of videos regarding technical indicators. This particular video we're going to be talking about the stochastic oscillator, so let's get right to it. First, let's get into a little bit about what it is and how it's calculated. Then we'll jump to a chart and show you what it looks like live. The stochastic oscillator was developed by George C. Lane in the late 1950s. It's a momentum oscillator that uses the current closing price in relationship to the high and low prices of a specific period, and that period is set by you when you put the indicator into the chart. It basically follows the speed or momentum of price, and it's most commonly used to identify overbought and oversold levels to anticipate reversals. Stochastics consist of two lines called the %K and the %D. A %K line with a setting of 14, which is the default on most charts, is calculated as follows. The current closing price minus the lowest low of the last 14 bars, because in this instance we have a setting of 14. Then you divide that by the highest high of the last 14 bars minus the lowest low of the same 14 bars. And then you multiply that number by 100, basically just to move the decimal point over two spaces. The %D with the default setting of 3 is basically a 3-period moving average of %K. The purpose of this is to smooth out the %K line to slow down the movement. Some people also use the %D as a trigger point. There's basically three types of stochastics. There's fast, slow, and full. Fast is what we just described in this calculation. Slow stochastics is when you take your %K calculation and you smooth it out with an additional 3-period moving average. So basically you take the last 3 %K values and divide it by 3 to average it out or smooth it out. And then the %D smooths it out even more with another 3-period moving average. The full stochastics is basically very similar to slow. The only exception is you decide how much you want to smooth the %K and the %D by. Slow stochastics, it's a setting of 3 for both. Full stochastics, you can change it to whatever you want. So let's get right to a chart so you can see some live action and see how it works. Okay, we're looking at a chart of HRBN, Harbin Electric. This was from a couple days ago, June 29th, 2011. This is a trade that I did. I selected this one because it's a good example that you can't go off stochastics alone. Stochastics, as with all indicators, are a lagging indicator because they're going off of previous price history. And so you can't just trade by following stochastics. What you can do is incorporate stochastics with support and resistance areas or even other indicators to give you more of a high probability trade. So we have our stochastics down here. The yellow is the %K that we talked about. The light blue line is the %D. You can see the %D is a more smoother line. That's because it's a 3-period moving average over the %K. This is just the default settings. %K is 14 and %D is 3. So let me start this market replay here and show you what happened. So it came down. Stochastics were bottoming. You can see stochastics turning up. Normally, if you're just trading off stochastics, that would have been a signal. It's crossing above this lower channel here. But watch what happens. It fails and it drops. Basically, what I was looking for is for it to come down further to a support level, which was established at yesterday's low at about 1480. So this is dropping here. I was watching for that 1480 level. But immediately it hit 1470, spiked up, and you can see the stochastics pointing up. And in the course of about 9 minutes, this thing went from 1470 to 1570 for a $1 move. You can see also the stochastics immediately went into the oversold. This is, starting to get into the summertime, so volume is light, so you'll see stochastics make more extreme moves from the bottom of the channel to the higher part of the channel when there's less volume. But this is just a nice trade. Again, you can't really go off stochastics alone. but combining stochastics with other indicators and or support and resistance levels will help give you a higher probability trade. So I hope this helped you out. For more information on other technical indicators, you can check out our video library on this website. Or for a full list of videos and services, check out our website at www.exacttrades.com.